smartphone browser, and you can listen to the stream 24/7. All right, I write the Ultimate Growth Stocks newsletter at TFNN. I launched it in late April. Tough market, no doubt. Very, very tough market today, but I publish my newsletter every Tuesday. It's a weekly newsletter, but I do send out email buy and sell alerts in between. Sent out a market update today, so even though I publish an extensive update every Tuesday, I am in communication during the week when appropriate. If I'm either giving a market update on a day like today where we're seeing pivotal market action, or if I'm adding a stock to my model portfolio or selling a stock in my model portfolio. So you can check out a trial to Ultimate Growth Stocks right on the homepage of TFNN.com. You can click on the Newsletters tab and then click on Investment Newsletters, and you can get the trial that way. All right, taking a look at the market here, obviously just a really rough day for the stock market. We have the Dow currently down close to 500 points, call it 478 points, 4.3% to 10,647. The NASDAQ down more than 100 points. Just unbelievable carnage today. Down 102 points, that's 4% to 2436. And the S&P 500 down 47 points, that's 4% to 11,019. Now, one index that I don't talk about that much is the New York Stock Exchange Composite Index, and I know that the folks over at Investors Business Daily look at that quite a bit, and it is actually a fairly relevant index. It's very broad based. It's much bigger than the 30 stocks in the Dow, much bigger than the 500 stocks tracked in the S&P 500. But that index is also down 4% to 6,700 or so, and I have a chart of the NYSE index up for people watching on Tiger TV on the homepage of TFNN.com. That's on channel 1. You can look at charts right along with me, but you can see that the NYSE Composite today broke below its August 9th intraday low of 68.27, and this is potentially problematic here. It's a sort of a reason why I've been taking some profits in my model portfolio, taking some money off the table, lessening my exposure to stocks, because extremely bearish action today, particularly in the NYSE Composite. It so far is the only index to take out its August 9th intraday low. It is trading near its session low, just like the rest of the major stock indices. Let's go ahead and take a look at the S&P 500 in Tiger TV and see where that is in relation to the August 9th low. Still holding well above the low here. You can see it's trading around 11.21. So, but it's definitely in play. It's definitely in play today. We had heavy volume in the market yesterday. We have extremely heavy volume in the market today. At last check, volume on the New York Stock Exchange is, and the NASDAQ for that matter, is tracking about 50% higher than Wednesday's level. That means we could come close to 3 billion shares on the NASDAQ today. Remember, the average daily volume for the NASDAQ these days is right around 2.1, maybe 2.2 billion. On the New York Stock Exchange, we're looking at maybe a 1.5 billion share day. Its average daily volume is 1 billion. So definitely some problems for the market here. It's hard to believe that last week we saw that 6.3% gain in the NASDAQ. Remember, the Philadelphia Semiconductor Index up better than 9%. I mean, just a really strong performance, and frankly, there were growth stocks around that were making growth investors like me feeling pretty good. You had some base breakouts. You had stocks that were setting up, looking like they wanted to go higher, and looks like a little bit of a head fake by the market. All of a sudden, the August 9th lows look like they're in play. So tough day today. We'll see how things shake out over the next several sessions. But for now, we're looking at 2 days in a row of institutional selling. We had a big sell-off late yesterday when the Fed came out and announced their Operation Twist, where they're selling at the short end and buying at the long end to flatten the yield curve. Listen, the market knows that the 30-year yield right now, I think, is at right around 2.78%. So the yield curve has flattened quite a bit already. The 10-year is at 1.76. In fact, why don't we just go ahead and take a look at both of these yields here. That's TYX in the charting service that I use. Here's a look at the 30-year yield. Right now about 2.76 thereabouts, has just been obliterated in recent weeks, and also the 10-year yield got hit pretty hard again today. That's TNX, and this is the 10-year note. Okay, at right around 1.70%. So bond yields low. I had a feeling that the market was going to sell the news. I mean, everybody had been talking about the fact that Operation Twist was going to be what we would see from the Fed, and that sure enough is what it was. I think the bottom line with the recent market action is pretty simple. I mean, Europe is going to be a concern. It's going to be an ongoing concern for the U.S. stock market. But what's of the biggest concern right now is the health of the U.S. economy, where we're at right now. Next week, we've got the third and final revision to second quarter gross domestic product. Remember, in the first quarter, the economy grew at a snail's pace of 0.4%. The last estimate to second quarter GDP growth was 1%. Pretty weak. I suspect that the weakness in the market that we've seen the past couple of days isn't so much because of the amount of this Operation Twist, $400 billion, I think it was. Some people were thinking it was going to be 600, 700, maybe 800 billion. Market's not so much disappointed with that. I think the market knows that flattening the yield curve is really not going to lower the unemployment rate. It's not going to bring the housing market back as it's intended to do. And I think the issue right now is the fact that we could be in recession again, and the likelihood of a pretty darn weak GDP number next week could be being priced in here. So that's my take on things, and what's important to recognize is this is a market where a lot of people are looking for value. The bottom line is that there are a lot of stocks going down today in volume, which is problematic. A lot of these breakouts that we'll go over in a little bit have rolled over. They have fallen flat on their face, and when I see that happen, if I buy a breakout for my model portfolio, I'm much more inclined, rather than watch a small loss potentially get bigger. I'll recognize heavy volume in a stock. I'll recognize a failed breakout and say, you know what, it didn't work. It's time to move on, and I will cut losses short and move on. And what I've learned over the years is that you can take a small loss in a stock, and you can take several small losses in a stock, but the small losses can be easily overcome. What you want to avoid as an individual investor is watching a 5% loss turn into a 10% loss, and then watching that 10% loss turn into a 20% loss, and so on. You don't want to get in that position where you're hoping that a stock that you own is going to start going back up when it starts falling precipitously. This is a very risky market. Obviously, today's action is proof positive of that. And like I said, volume is very heavy today. So it's going to end. We'll end sharply lower. We'll end with volume coming in significantly higher than Wednesday. That is going to make, I believe, 5 higher volume declines for the S&P 500 since September 6th. Thereabouts. So when you start to see these, what are called distribution days, these higher volume declines, which usually point to at least some institutional selling, when they start to cluster like that, it can often precede additional price weakness. So now's the time to be playing defense. It's not the time to be looking at stocks that look like they're on sale, or maybe there's a stock that was too expensive at 90, but now it's at 80, and it's a much more palatable buy. That's still very risky in this type of market. I think the market's message has been is pretty clear now that this economy, quite possibly could be in worse shape than many initially thought. So we'll see how it all plays out. Taking a look at crude oil today, crude oil got hit pretty hard, not surprisingly, and with all this concerns about a slowdown in worldwide economic growth. Crude oil down 6.3% to $80.51 a barrel, down $5.41. That's the lowest level in about 6 weeks. We can take a look at the DIG, which is a ProShares ETF that tracks the price of oil and gas. You can see that completely broke down today. Currently down 13% to $32.63. That's the ETF DIG. And then if you continue to be bearish on oil prices, you're probably encouraged by the look of the DUG, which is the ProShares Ultra Short Oil and Gas ETF. And it looks like a good breakout taking shape in this ETF. Again, if you're bearish on oil prices, you think they could fall further below 81 or $80 a barrel. Going long, the DUG is probably what you want to be doing. Taking a look at gold, down 3.7% to $1,741.70 an ounce. Take a look at the GLD, which tracks the performance, 1/10 the price of gold. The GLD currently trading around 168.61, down 3% on the day. It is now trading below its 50-day moving average. 50-day line is at 169.60. The GLD is now at 168.61. So commodities getting hit hard, oil prices down, gold down. Taking a look at the GDX. This is the Market Vectors Gold Miners ETF. Also having a tough day. This is down 8% today. $5.14 to $59.14. It's near a session low, crashed below its 50-day moving average as well. So a lot of carnage in the market. I really have no interest in going long anything at this point. I'm going to be just stepping out of the market's way here. I still have maybe 5 or 6 stocks in my model portfolio that are still profitable. So I will hold those for a while and see how things go. But generally going to be stepping aside and going to let the selling run its course. Stick with us, folks. We'll be right back.
A burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of tfnn.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. My name is Ken Shreve. Thanks very much for tuning in. Didn't get a chance to talk about the strength in the U.S. dollar again. Boy, has that really been a rocket ship in recent weeks. Taking a look at the UUP here, this is an ETF run by Power Shares. It's the U.S. dollar index bullish fund. It is up 1.2% today to 22.29. This was a fund that only a couple of weeks ago was trading around $20 and a half, 21. So it's really been racing forward. And when you have the strength in the dollar and the strength in the bond funds as well, I know that the TLT, which is the Barclays 20-plus year Treasury bond fund, that has also been a rocket ship right along with the dollar. The TLT is up another 4% today to $123.26, but in a strong uptrend as well. But the strength in bond funds, the strength in the U.S. dollar, I mean, that's a pretty significant headwind for the stock market. So we'll be monitoring price and volume trends in the Dow, S&P 500, and NASDAQ going forward, and look for signs of accumulation. Certainly yesterday and today, some pretty significant distribution going on in the major averages, and a lot of these breakouts among growth stocks that we've seen over the past 2-3 weeks or so are falling flat on their face. There are maybe a handful of stocks that are still holding above buy points, but the action is pretty bad. Another reason for market weakness today, people talking about some data out of China. I think it's a little bit overblown. Most people that I talk to and economists seem to think that China is going to be able to avoid a hard landing for their economy. That recent economic data, has been pretty decent. But earlier today, the HSBC's preliminary China Manufacturing Purchasing Managers Index, it's known as the Flash PMI, fell to a 2-month low in September. HSBC did downplay the data, saying the reading was consistent with moderating growth, which is what has been going on in China, and that there's no reason to be concerned about a hard landing for the economy. So that's another reason being given for the weakness in the world markets and the U.S. major averages as well. Like I said at the top of the show, I think there are just concerns that perhaps economists have underestimated where the U.S. economy is really at here. And I think next week again when the GDP data come out. We'll get a better feel, but I think the market is probably flagging a pretty weak number in that regard. And also, looking at job growth, over the next 3, 4, 5 months, it's not likely to be very strong, and the unemployment's going to stay upward, around 9% for the time being, and the housing market not coming back. So there's just a lot of issues that the market is facing right now. Earlier today, we did have jobless claims. They fell to 423,000 last week from 432,000 the prior week. That number was upwardly revised. The 4-week moving average of new claims is now at 421,000. That's a 2-month high. All right, taking a look at some gainers today. Aircraft parts supplier Goodrich, that's ticker GR. We'll take a look at Goodrich Corporation. It's being acquired by United Technologies. This deal has been out there for a while, but the deal does value Goodrich at $127.50 a share. Shares of Goodrich up 10% today to $120.53, so a little bit below what the deal is valued at. That's interesting. But Goodrich is a aircraft parts supplier. United Technologies is looking to get a bigger presence in that field. Taking a look at Netflix. This is an interesting story around Netflix today. At last check, the stock was bouncing back. Let's see what the market bleeding pretty badly. Netflix is now down. It hit an intraday high of 132.90. It's now trading around 126.20, down about 1.8%. But an interesting note today from a Wedbush analyst basically saying he raised his price target on Netflix to $155 a share from $110, saying that Netflix, he says he sees Netflix working here. He thinks that Netflix could be setting itself up to sell its online video streaming business to Amazon. Remember all the problems with Netflix. Their DVD by mail is now known as Quickster. They basically separated the two areas of their business, and that made subscribers even more, or customers even more upset than they first were. But that's interesting. Netflix could be setting its up to sell its online video streaming business to Amazon, according to a Wedbush analyst. All right, take a look at some earnings reports when we come back, and a couple of heavy volume movers. They're out there in spades today. We'll be right back.
If you're in the market for a jumbo loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your gold report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Ken Shreve with you on TFNN. Let's take a quick look at the markets here. About a half an hour left to go in Thursday's session. Still near session lows. The Dow is down 467 points, 4.2% to 10,658. The NASDAQ down 102 points. That's 4% to 2436, and the S&P 500 down about 46 points, call it 3.9% to 1120. Price levels that we're looking at, I mentioned these August 9th intraday lows back in play, particularly for the S&P 500, looking at 1101 on the S&P 500. That was the intraday low again set on August 9th, and the S&P 500 is now, like I said, around 1121. For the NASDAQ, looking at 2331, it is still about 100 points above its August 9th intraday low. So the thinking is, technicians will tell you if those lows get undercut, it could result in another wave of selling or another shakeout where you would think the last remaining sellers are going to get shaken out of this market, and that could pave the way for a nice bounce after that. So believe it or not, I'm still thinking that this selling, once we when the market falls precipitously like it tends to do recently, we're in a period of heightened volatility, negative headlines, unpredictability, seemingly every day, but you can get these 5-10% downward moves in the market that can take just a few days to play out. So you have to be ready. You have to be ready to put money to work if you do see signs of a new uptrend. So I still think there's a good chance we could get a fourth quarter rally. Companies are going to close their books September 30th, and then earnings reports are going to start coming in. Obviously, that still is a concern. I mean, their earnings situation, I touched touched on this during Tuesday's show. Yeah, I mean, in the growth stock universe that I cover, I cover stocks that tend to deliver nice earnings and sales growth quarter after quarter after quarter. Some of them are higher multiple stocks that are held to a high standard. I think there are going to be plenty of cases of good bottom line and top line growth, but with the U.S. economy looking the way it is, with the problems going on in Europe, there are a lot of U.S. companies that have pretty good exposure over to Europe. What are the chances that we're going to see a lot of these U.S. companies, issue? What are the chances we're going to see good outlooks, raised outlooks for the fourth quarter, for the second quarter of 2012? I think that's a big question mark. So hopefully third quarter earnings season will be solid, but that's kind of tough to say right now. So we will see. Today we did have some pretty good earnings reports. I've been talking about Bed Bath & Beyond, BBBY. A lot of people confuse this ticker with Best Buy, which is BBY, but Bed Bath & Beyond had good numbers, and we'll pull up a chart of that here. Bed Bath & Beyond is BBBY, and good earnings late Wednesday from the retailer. Earnings up 33% from a year ago to 93 cents a share. Sales up 8% to just over $2.3 billion. A lot of positive analyst comments earlier today when the numbers came out. Very well-run company here, I've been saying, and a solid performer. Shares were up when the market was down sharply, but actually still hanging in there pretty well today, up 4 cents to 57.52. So it is hanging in there. It did hit an intraday high of 59.19, still holding above its 50-day moving average, but nice earnings from Bed Bath & Beyond. And also Red Hat, RHT. I hadn't looked at this stock in a little while. They are a provider of open source software, Linux software solutions. Earnings up 47% year over year to 28 cents a share. Sales up 28% to $281 million. Have to give this company a lot of credit. Technically, it's still kind of far off its high, but having a good day today, up 2% to 41.16. Great growth quarter after quarter after quarter from this company, Red Hat. We'll be right back, folks.
If you're in the market for a jumbo preferred non-conforming loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. As a direct lender with processing, underwriting, and funding all under one roof, Everbank can offer the most competitive rates, greater efficiency, and shorter closing times. Now is the time to act. Everbank offers fixed terms of 10 and 15 years, as well as adjustable terms of 5, 7, and 10 years, including interest-only options on primary residences. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970, 877-471-5970.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. If you're watching on Tiger TV, I had a chart just a little while back up on Yum Brands, but I never said why I had the chart up. Stock is under pressure today, down 3.4% to $50.77. Apparently, investors not that enthused about the fact that the company is selling its Long John Silver and A&W restaurant chains. Of course, Yum Brands still has the Taco Bell, Pizza Hut, KFC in their stable, but they're selling Long John Silver and the A&W chains to a couple of limited liability corporations. So again, not helping the stock much, down 3.4% to $50.77. All right, taking a look at some stocks. Fertilizer stocks have really been under quite a bit of pressure. They were really the first group to roll over. One of the strongest performers in the group, Terra Nitrogen, catching a bid today, up 4.6%. to $145.40. Terra Nitrogen is a thinly traded stock. It only has an average daily volume of about 100,000 shares or so. It does have a market cap of $2.7 billion, but you see the stock came down close to its 200-day moving average. Really, came off its high of around 200 really hard over the past couple of weeks or so, and found support at its 200-day line today. It hit an intraday low of 128.50. Shares are all the way back up to 145.40, up 4.6% on the day. Still actually would consider this a broken stock with all the selling that has been seen over the past couple of days. It crashed below the 50-day line yesterday. Again, bouncing back today, but still the fertilizer group I'm not a big fan of here. CF Industries, another strong performer in the fertilizer group. That is until about 2 or 3 weeks ago when it came hard off its recent high of 192. Shares are down another 4% today to 146.51. So looks like the strength in Terra Nitrogen today is not spilling over into the fertilizer group as a whole. CF Industries broke below its 200-day moving average today. That's about 144.62, but it has rallied off of that low. It's up around, again, 146.51. Still down 4.2% on the day, but trading in the upper half of its trading range. Take a look at Chipotle Mexican Grill here. I gotta say, this stock, when the market was down 2-3% earlier in the day, Chipotle was only down about 0.5%. I mean, it was just acting really strong. Still, it technically doesn't look that bad. Chipotle recently broke out over $318 a share. The buy point was right down in this area here, so it is still holding above its buy point. Stock is, hanging in there relatively well today, down 2.5% to $324.98. Again, the last buy point here was, $318. So Chipotle is still holding above its buy point, also holding above its 50-day moving average. Just a real super strong stock here. Interesting that Chipotle quietly launched its first new restaurant, sort of Asian casual. I believe it's called I should know the name of it. Show House, I want to say, but it's an Asian casual theme that they're dabbling in. I believe it was launched in Washington D.C. So we will we will see what happens with Chipotle, but really a strong stock in the restaurant group right now. Taking a look, moving on to Priceline, PCLN on the NASDAQ. Priceline getting hit pretty hard today. You got to remember these growth stocks. When the market is down 3%, it's not uncommon for a growth stock to correct at least 1.5, 2 times what the market does. So if you have a decline of 4% in the market, it's pretty typical. You're going to see some of these high-flying growth stocks down 6, 7, maybe even 8% on a really hard-hit day for the market. Priceline today down 4.7%. So, relatively speaking, it is underperforming the NASDAQ. But this is just another example of a breakdown here, just an unequivocal breakdown where, if you thought Priceline was too expensive at around $550 a share, well, at $506, it's got to be a much better deal, right? Well, I would not agree with that because it is breaking down. Volume is pretty heavy in the stock. I wouldn't be surprised at all to see more downside here. So gap down today, stock down 4.7% to 506.14, trading underneath its 50-day moving average. So that's one name that looks like it's in trouble. Also, Intuitive Surgical. We'll take a look at Intuitive Surgical. They make the Da Vinci robotic surgical system. Another stock, what was interesting with Intuitive is that while a lot of growth names were showing strength and breaking out, Intuitive Surgical was still having a hard time. You can see its prior high over here of around 410, and it never really tried to break out, and it's working on 3 straight declines. Currently, stock is down 3.9% today to 365.59, but another breakout that does not look like it has a chance of working. Moving on to MasterCard. Take a look at MasterCard here. This stock is down 2.7% today to 331.89. It came down to its 50-day moving average today at 321.84. So still hanging in there. You can see MasterCard is a stock that has a tendency to show respect at its 50-day moving average. It tends to ride that line higher, and it did come down today and touch the 50-day, and it is now trading around $332 a share, slightly above its 50-day moving average. So it looks like it could find support there again. Take a look at Wynn Resorts. Las Vegas Sands had a fairly bullish analyst day yesterday, and a lot of positive comments. Wynn Resorts is another casino operator that has a big presence in Macau off of mainland China. Pretty serious breakdown here as well. So stock is down 5.2% to 139.51. So just going through some of these growth names that are having problems. Clearly with the Nasdaq down. Last check about 3.5% or so. These growth names are just going to have a lot of problems. So while it looked like there was leadership kind of sprouting up in the NASDAQ. NASDAQ jumped 6.3% last week. A lot of these recent breakouts, including Wynn, which recently tried to break out over 157.69, that one failed miserably as well. Very risky market environment out there for growth investors. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
If you're in the market for a jumbo loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you on TFNN. Quick check on shares of Hewlett-Packard here. The rumor is that former eBay CEO Meg Whitman is going to be hired on at HPQ to take over the CEO role. That's a mouthful, from Leo Apotheker. It was not a good run at Hewlett-Packard for Leo Apotheker, former CEO at German software company SAP, but shares of Hewlett-Packard not really moving on the news. In fact, down 5% to $22.75. Again, the news here is that Meg Whitman could be hired as the new CEO there. So I wanted to take a look at another growth stock, maybe two. We probably have time to take a look at least two. Green Mountain Coffee Roasters. Stock came down to its 50-day moving average today, bounced off the line. It's still taking a hit, down 5.6% to 103.86, but its 50-day line is right around $100 a share. Green Mountain so far has bounced off that line. This is another kind of a feeble breakout attempt over the past several days. Could never really get going. My concern about Green Mountain is even though growth prospects remain very bright at this company. They do the single-serve coffee. They sell the Keurig machines, K-Cups, that type of thing. They just signed a deal with Starbucks, Dunkin' Donuts. Very well positioned for growth, but also a high multiple stock that has come up a long way already. So my feeling is that the big money has already been made here. I could be wrong. It is still acting well, holding above its 50-day moving average, so we'll see what the future holds here. And then also, name I've talked about in the past, Hansen Natural. They are a beverage maker, sort of a defensive play in this market. They're most known for their Monster Energy drink. Stock is all the way up near its session high today. It's still down almost 2% to 89.29, but not that far off its intraday high of 89.74, still holding well above its 50-day moving average around 82, which happens to be right around its last swing point, or the last buying area of this stock when it broke out on August 23rd. It cleared a buying area of 82, and that happens to be right where its 50-day line is as well. So Hansen Natural acting very strong in this market. That is worth noting. And finally, we'll take a look at Under Armour. This is another recent breakout that looked like it had potential. It really did look like it had potential, but you can see it broke out over $73 a share right in this area here, ran up, some good volume behind the move. It has rolled over as well, trading about 5% below the buy point now at $70.49. It's down about 4.3% on the day. Coming up after the close, we've got earnings from Nike and Finish Line. Take a look at Nike, ticker NKE on the New York Stock Exchange. Shares of Nike down 1.3%, not too bad, to 84.65 ahead of the report. Nike is a troubled stock, technically. There are a lot of troubled stocks in the market now that have pretty bad price and volume trends in the chart, but investors will be hoping from good news from Nike. Earnings are expected to rise 6% year over year to $1.21 a share, with sales up 11% to $5.75 billion, and also Finish Line, ticker FINL. Finish Line is also reporting earnings after the close. Stock is down 2% to $18.41 ahead of the news. Finish Line is expected to report earnings of 38 cents a share, up 23% from a year ago. Sales up 7% to $321.9 million. My next show on TFNN will be next Tuesday, 3 to 4 p.m. Eastern. I will be on Tom's show tomorrow, Friday, talking the market. I'll be on around 4:25 Eastern or so. So I'll look forward to speaking with you then. Join me next Tuesday for another edition of Breakout Investing. Take care, folks.